Hello everyone, and in this video I'm going to talk about a model that is easy for beginners to understand, learn, and implement. So I call this model the two-step model. It can also be called an OT model, a reversal model, but I call it the two-step model. Now I'm doing a series of videos that explains the two-step because really and truly it only requires two steps. So I started talking about gold, although I do spend a lot of time on my channel talking about ES and NQ. But let's, for now, focus on gold. So in the last video, you'll have to watch that video. I was talking about this specific price structure here. And I mentioned that there's a potential possibility for a two-step. However, I said if price breaks this high right here, then you don't have a two-step. Okay, so the two-step does not exist. This was the high we were looking at as your initial sort of point A. This low was point B, and then this high was point C. So the focus was on what happens at point C. What is your edge? What is the opportunity at point C? Now, I will do a completely separate video that talks about the sort of many ways you can enter a trade. So I think there's about three main ways, three main categories. So one obviously is a V-shape entry. The other one is a mushroom entry. And then the third is very similar to a head and shoulders or a breaker sort of pattern, right? Those are kind of your three main ways to enter a trade at a key level, but that's a separate video. For now, let's follow this trade. So right now, I am looking at the gold 20-hour time frame. I'm using this. This works on any time frame. I just like personally to use the 20 hours. So right now, what we have, this is live data. Okay, we have this candle that has closed beyond this high. Very important. This is now indicating that it wants to go higher, not lower. It wants to go higher. The trend is bearish, but price does not move in a straight line. So it will go down, then it will go up. And this is the fundamental thing about the two step. The first step is direction, or you can call this your trend. And the second step is your retracement back into the trend. So it's a counter trend. So we were looking at this move here as the initial downtrend, and then this move as the counter trend, so the reversal or the retracement. However, because this has broken this high, what we now are looking at is this low to this high as your initial direction. So that's if you want to play the retracement. And then this high to this low as your retracement. What does that mean? That means that from this low to your target, you're looking at 100% measured move. So you just take a fib and you place it right at the low. Just any fib will do. All right, and then if you take that fib and you measure to this low, okay, you should be looking at this area here as a target. That's the two-step. Direction is step one, and then step two is just retracement. So you can enter the trade anywhere here. If you were watching this trade as a potential reversal or a strong retracement, or now that I know that this is now bullish and this is my targeting, I can use, I can frame an entry based on the low of this candle, looking for a retracement. So think of it as another micro two-step. So all I do is go into a lower time frame. This can be a 1 hour, it can be a 4 hour. For example, let's do the 4 hour. Now I'm looking at this low, for example, to this high or whatever high forms. Then I look for a retracement and then do a two-step. That's the two-step. It's repeatable because the only thing you need is just price and some kind of trend, whether that's a short-term trend, medium-term trend, long-term trend, it doesn't really matter. Now, as I mentioned, what really helps at point B, point C, so when you have the initial direction, so let's say this is your point A, let's assume this is point B, this is not point B yet. And when price starts to come back down to point C, what you're looking for, one thing you're definitely looking for is SMT. Okay, so when you see that, that gives you confidence to say this is where potentially the retracement will end. Let's not forget that we are using our fibs based on the swing lows. So I could use this low, for example. And if I run, I'm not going to use that low, but let's just say for argument's sake, let's say we have a swing high. We don't have a swing high yet because we've not made a lower high. This is a live price, by the way. Any fib, any fib, 20%, 30%, 50% can act as support for your retracement, right? I can use this low. I could use this low, okay, or even this low. All right, I would use this low preferably because this is the main low that broke this high. So I would use this low. So now, right now, all I'm doing is sitting and waiting for a retracement to at least the 50%, at least 50%. So anywhere below this 50% for me is a prime zone to take a long. So again, I'm looking for two specific things. When price gets to the 50%, so I'm doing nothing, absolutely nothing, until price gets to the 50%. When price gets to the 50%, now I'm looking for SMT, right? That's the first thing. The next thing I'm looking for is my edge, right? It's the entry, the thing I'm comfortable with at that location. Like I said, there's three main different structural types of entries. You've got your mushrooming, you've got your head and shoulders or a breaker, and then you've got your V shape. So I match that with the SMT at a fib level, plus if I have a fair value gap or a order block, or even a fixed range profile location, specifically it could be the point of control. So I can use that. So let's take an example here. I can take this fixed range profile, take this swing low, run it to the swing high. We don't have a swing high yet. Okay, so this is just an example. And what I can do is use this point of control as my point of retracement. And when price gets here, I'm looking for SMT, and I'm also then looking for a reversal, right? Like a structural reversal. Mushrooming, head and shoulders, V shape. That's it. It's as simple as that. Your stop loss below the low of your swing, your entire swing, right? Right there. That's where your stop loss is going to be. So the closer it gets to your stop loss, the better the entry. All right, guys, hope you enjoyed the video. I'll be talking a lot more about the two-step, but I'll be using the gold because I want to do like a live example as price moves, right? So you usually do ES, but I just wanted to do something different, so I'm going to use gold. If you enjoy the video, please subscribe, like the video, and share, and I'll see you in the next video.